Ever feel that roller coaster of emotions when you're trading? The heart-pounding thrill when a trade goes your way, and that gut-wrenching drop when it doesn't. We've all been there. Most traders focus on charts, indicators, and strategies, which are all crucial. But what if I told you that the single most powerful tool for improving your trading performance isn't on your screen? It's right here, in your mind, and the key to unlocking it is a trading journal. Now, I know what you might be thinking. A journal. Isn't that just for writing down entry and exit points? Well, yes, but that's only scratching the surface. A truly effective trading journal is your personal psychologist, your coach, and your most honest critic, all rolled into one. It's where you don't just track your trades, you track yourself. Specifically, you track your emotional responses. This is the secret sauce that separates consistently profitable traders from the rest of the crowd. Let's break down why this is so critical. Trading is one of the most psychologically demanding professions on the planet. Two major emotions constantly try to sabotage our success: fear and greed. Greed makes you hold onto a winning trade for too long, hoping for that extra bit of profit, only to watch it reverse and turn into a loss. It's that voice whispering, just a little more. Fear, on the other hand, can be just as destructive. It causes you to exit a good trade prematurely at the first sign of a pullback, missing out on the big move you correctly predicted. Or worse, it causes analysis paralysis, where you're too scared to even enter a trade that perfectly fits your strategy. These emotional reactions are deeply ingrained human instincts. You can't just wish them away. So, how do you manage them? You start by making them visible. You have to document them. This is where your trading journal becomes your superpower. Before you even place a trade, take a moment to write down how you're feeling. Are you anxious, overconfident after a series of wins? Desperate to make back a recent loss? Be brutally honest with yourself. No one else needs to see this. Then, as the trade progresses, jot down notes. Did you feel panic when the price dipped? Did you feel greedy when it spiked? After the trade is closed, whether it's a win or a loss, the real work begins. Review your notes. Look for patterns. You might discover that every time you feel FOMO, the fear of missing out, you jump into a poorly planned trade and lose. Or, you notice that after 3 consecutive wins, you get overconfident, double your position size, and then suffer a massive loss that wipes out all your gains. These are not random events, they are predictable patterns of behavior driven by your emotions. Without a journal, these patterns remain invisible. You'll keep making the same mistakes, blaming the market, your strategy, or just bad luck. But with a journal, you bring these self-sabotaging habits into the light. You can see, in black and white, the direct correlation between your emotional state and your trading results. For example, you might write, "Felt impatient today. Market was slow. Forced a trade that didn't meet my criteria. Result? -1% loss. Note to self, patience is a virtue. No setup means no trade." This process of documenting and reviewing does something magical. It creates a feedback loop for self-awareness. You start to recognize your emotional triggers in real time. The next time you feel that familiar rush of FOMO, a little voice in your head, trained by your journal entries, will say, "Wait a minute, I know this feeling. The last 5 times I felt this and traded, I lost money. Let's step back and reevaluate." You transform from being a reactive trader, tossed around by emotional waves, into a proactive trader who navigates those waves with skill and discipline. Think of it like a professional athlete reviewing game footage. They don't just look at whether they scored or not. They analyze their posture, their decision-making under pressure, their position on the field. Your trading journal is your game footage. It shows you the how and why behind your wins and losses, not just the what. It helps you identify your psychological blind spots. Maybe you have a tendency to revenge trade after a loss. By documenting this, you can create a specific rule for yourself, like, after any loss, I must step away from the charts for at least 30 minutes. This practice builds emotional resilience. Trading will always be stressful, but a journal helps you detach your self-worth from the outcome of any single trade. You begin to see losses not as personal failures, but as data points, valuable lessons that you paid a small price for. You start treating your trading like a business, where decisions are based on logic, probability, and your tested strategy, not on fear or euphoria. So, how do you start? It's simple. Get a notebook or open a digital document. For every trade, record the basics, the asset, entry price, exit price, and stop loss. But then, add these crucial psychological fields: reason for entry based on my strategy, my emotional state before the trade, emotions during the trade, and post-trade reflections and lessons learned. Be detailed. The more you write, the more you'll uncover. At the end of each week, review all your entries. Look for those recurring emotional patterns and how they impacted your bottom line. This isn't a quick fix. It's a discipline. It takes effort. But I promise you, if you commit to keeping an honest and detailed emotional trading journal for the next 90 days, your perspective on trading will fundamentally change. You'll gain a level of self-awareness and control that no indicator or algorithm can give you. You will stop being your own worst enemy and start becoming your own best trading coach. This simple habit is the bridge between knowing what to do and actually doing it consistently. Start today. Your future, more profitable self will thank you for it. If you found this helpful, please give this video a like and subscribe to the channel for more content designed to make you a smarter, more disciplined trader. Thanks for watching, and trade safe.